Hi, I'm Darren Long from Delta Harbour Assets, and on this week's Hard Money, we're going to talk about the sensitive topic of cryptocurrencies and loss, because everyone has the wrong opinion about what a cryptocurrency is and what it should or shouldn't do. And not to mention this week's big news, the FTX exchange going down and dragging some people that you might not have realized were parked on that exchange. That and much, much more about gold and silver, how to get into your portfolio, coming up right now on Hard Money.
There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey, welcome back. Good to have you here at Delta Harbour, and we're back with another podcast. Darren Long is here. John Scholes as well. Good to have you along for this show. You want to reach out anytime, 1-877-323-GOLD. Why would you call? You would call because quite possibly you haven't got this missing link in your investment portfolio, and that would be the link of physical metals, gold and silver. Have you got a piece? Have you got a taste? No, you haven't done it yet. Reach out to Darren and the crew at that phone number, and also deltaharbor.com, Harbor with a U, and maybe expand that part of your portfolio. Darren, I know you want to talk a little bit later on about what's been happening with cryptos. Some big news coming out this week as well, not only the catastrophic plunge of a few of them, but where we stand at this point and how maybe some of your investors are kind of hovering above it all, going, should I do it? Should I not? We'll have some advice and some word on an article from GoldSeek here in just a bit. But we always start off with an update, brother. How are things on the heavy, nice, full, tangible, hold in your hand markets for gold and silver? What's going on?
Well, first off, welcome everyone to the show again this week, and we're glad to have our listeners here. It has been a rather good week for gold and silver as far as they are concerned. Gold sitting in the 1765 US range on paper, a spot. Silver sitting in the 2150 range, again, spot paper. And both metals, nice moves through the week. Gold up around 100 and silver up a couple of bucks.
Beauty.
Since the last time we did this show, an ounce. Again, just a precursor of what is going to come and what is going to happen. We're well into this onset phase of recession, and we're looking at all of the different data coming across the board. And certainly this week, we are going to pick a little bit on cryptocurrencies, remind people that they are not a replacement for physical gold and silver. That being said, both are holding very well as we speak. I like silver a little more than I like gold right now, John. But again, news of the week is certainly not focused on gold and silver, although they've fared very well during the last little while. They've held their own. What I do want to remind our listeners of is that both metals are getting precariously close to being positive on the year. Here we are in November with another month left to go after this. And ultimately, we always measure gold and silver over the long term by the performance on a year-to-year basis. There is plenty of room left for these two metals to pick up ground here. Gold is only now down around 3.4% on the year, and silver is down around 7.6%. Now, the average person listening to this says, well, yeah, that's red. That means I lost money. Imagine being invested in the stock market because the TSX is down around 8.5%.
Right.
The Dow Jones year to date is down around 11%. The NASDAQ, if you unfortunately invested in the index, is down around 29%. And the S&P is 500 is down around 17% right now. So again, there are lots of worse positions to be in, and we always have to reflect as investors on what we need to keep our portfolios well balanced. Well, right now, gold and silver are proving to me that despite the fact that the markets in the broad sense have come down now with the expectation of recession set in, that they are doing their job in protecting wealth, holding wealth against a sea of 30-foot waves. I mean, this is just an unheard of set of circumstances that we find ourselves in now, with everything starting to drop and the realization setting in that we don't have any organic dollars to spend, that we have nothing but debt to spend. And so if people want to go out into the marketplace, we're now past post COVID. So whatever boom there was going to be is come and gone. And now people are just going to cross their fingers and hope for the best. And I'll bet you, if you're listening to this show and you have spoken with your planner advisor in the last little while, what advice have they given you? Well, one of the pieces of advice that we are hearing people are being given right now is to stay the course. And this is the most typical bullshit that's given to them every single damn time the market is on the precipice of blowing apart. In 2008, the last time it happened, so many people were told, don't worry, this is a long-term game, stay the course. And what you find is that between that time and now, that yes, the stock markets did have a wonderful run based solely on the fact that there was so much free and cheap money being printed and put into the system. Liquidity was way up and interest rates were low. So it encouraged spending. It encouraged people to go out and take risk. And that's what the system did. It was meant to do. But now that they've been too late to raise interest rates to come to the savior of the consumer, now the consumer is absolutely screwed, because they are coming to the realization that what they thought was an organic growth market, what they thought was a post-COVID boom, whatever their mindset was about the reasons why they should bulk up their mutual fund holdings, bulk up their paper holdings, those reasons are starting to fall apart. And unfortunately, the worst part of this job, John, is having to listen to people who are going through that. And this week was no exception. Probably 20% or more of our phone calls were from people who have lost a ton of money this year and are pissed. They're upset. They don't know what to do. They're not experts in these arenas. And unfortunately, in turning to their institutions, they're letting them down, because institutions are saying, hey, the less we have to talk with the client, the better off we'll be during this tumultuous, unheard of, record-setting pace that we're about to see in terms of the downside of a market. So if you've only lost 20% in your portfolio so far here to date, that's not bad, because we've talked this week alone to two people who have lost more than 50% of their portfolio already. And I'll bet you, John, most people don't even realize that the market's been that bad. They haven't even checked in with their wealth, don't even know what's happening. So very proud of gold and silver and what they've done. The markets have been tightening behind the scenes, John. We've had to do a lot more footwork and a lot more phone calls into making sure that our supply levels are in check, to make sure that we've got enough supply on hand, which we do, and that we're still getting regular shipments coming in, which we are. And so that product on our site that's there is readily available, and we're still transacting in a very feverish manner coming into the last quarter here. And I suspect that as we get closer to the holiday season, the Christmas break, we're going to see a very, very fast-paced market. And then into January, all hell is going to break loose. So once we get through this kind of pick-me-up holiday season where people want to be spenders, we have Black Friday coming and Cyber Monday in the US for Thanksgiving. Again, once we're through those weekends and we see where the numbers stand, there's not much in the way of data that's really making much sense now that we could look towards and say, hey, there's a change. We're good to go. We're stabilized. Everything's okay. We've got poor housing data. We've got the threat of inflation staying very high into first and second quarter of next year. Interest rates, which we know the central bank here in Canada, in the US, aren't going to flatten anytime soon, at least not into the middle of next year. So expect interest rates to stay high, and a whole shitload of refinancing happening in the US and Canada. And the rules that people are waking up to. I mean, just look at the real estate market alone. Not only do you get kicked in the proverbial nuts when it comes to buying a mortgage, because the interest rates are much higher than the last time you locked in, but if you're on a variable, you just watched your payments per month double in the span of 3-4 months. Totally. So ultimately, that's disposable income that you had to spend elsewhere on the economy, which is now going towards your house. So it stands to reason that we'll continue to see a slowdown in that particular sector. And again, more reason why, if you are a speculator and you do have powder dry on the side, gold and silver are a must for your portfolio. Just look at the story. Just look at the facts and look what historically has happened. And you'll find out very quickly that this is a very unique situation where gold and silver are expected to perform and continue to perform very well.
Again, guys, 1-877-323-GOLD anytime. Pick up that phone, talk to Darren, Rob, just have a conversation, get educated even before you throw some silver or gold in your portfolio, which will probably be the natural progression once you make that phone call. Physical metals, by the way, which we're going to talk about, Darren, a little later on, exactly how the different ways and options you have for doing exactly that. But let's get into this article from Gold Seek. Just read it a short time ago. Interesting about the world of crypto, Bitcoin, Dogecoin, and all that stuff. Give us I got my thoughts on it, but give me yours. What do you think about the overall with that article?
Well, like many things that come along, we like the new thing. We like the new shiny thing. And of course, people flock to it like they flock to NFTs. Cryptocurrencies have been with us now for about a decade. And I think they've had a nice run. Of course, they are speculative. We've said from day one, practical applications of things like Bitcoin or Ethereum or any type of cryptocurrency are few and far between at this point in time. They are very, very early in their stages of life. They're in their infancy. And as a result, because of the amount of the breadth of different types of cryptocurrencies and what they can and cannot do, there of course popped up many exchanges to handle transactions in cryptocurrency. Well, this week comes a story that's certainly public now in the sphere, and I hope people are taking the time to read it because it is an eye-opener as to exactly how fast this can happen. But there is a major exchange called the FTX. And essentially, there's an exchange for cryptocurrency. And with the amount of pressure that cryptocurrencies have felt as of late, because they are not replacements for hard assets like gold and silver, we have to keep reminding people of this. They are not the next go-to asset to protect your wealth. Bitcoin is down some 70% since its peak of 60 whatever it was, 1,000 and change, down sitting at around 16,000 and change today. And it's done nothing but lose ground this year to date. And that's one of the world's largest examples of a cryptocurrency. But on the heels of that, this week comes the announcement that facing from, this is from Gold Seek. It's written by a colleague named Stefan Gleason of Money Metals. And he's just pointing out what occurred and summarizing the events. And what happened was this major exchange, it's a huge exchange. It's called FTX. And it was facing a wave of customer requests for withdrawals because, of course, cryptocurrencies are shit. And that's just the truth. Sorry. If you like cryptocurrencies, I'm happy for you. They're going to have practical applications long term, but not before we take the 10,000 of them that there are and squeeze them down to 2 or 3 that we actually need. Yeah. So at this point in time, purely speculative. And if you put your money into cryptocurrencies, you better know what you're doing. And I'm happy if you made money. That's great. Congratulations. Turn that money into something real like physical gold. But as they were saying, facing a wave of customer requests for withdrawals, and I'll quote here from the article, FTX announced it was experiencing a liquidity issue. Then the article says rival firm Binance initially offered to help facilitate an emergency rescue of FTX. But after some investigation of FTX's finances, Binance concluded the issues are beyond our control or ability for them to help. The issues reportedly include widespread misappropriation of funds in client accounts. All right. This has Bernie Madoff shades of, fraud all over it. Right. And again, to me, early days, we're only speculating here, and this is still, of course, an alleged situation. I'm sure heads are going to roll, but it says FTX has specifically touted itself as a safe and secure platform. Do you want to know how safe they were? Our idiot Ontario pension for teachers invested in that.
Nice.
Using FTX, 95 million US dollars. Drop in the bucket for them, small amount. Still. Goodbye. There goes a percent or a 0.5%. Yeah. I mean, they have to line up like any other creditor and try to hope that they can get some of it back. But that's how trusted they were. And that's what this particular realm of individual people has come to understand, that behind the scenes, unless you're the most trustworthy, unless you're vetted through and through, and unless you have tested that liquidity time and time again, and in crisis, remember, all the cryptocurrencies have been around now that have been coming up, have yet to experience major crisis. This is the first big major crisis on a global scale of liquidity that we're going to face here, and it will be huge. Mark my words. So the question becomes, as this article so aptly points out, is this the great reckoning, that's coming for all crypto markets, and that will soon hit all exchanges as people try to get their liquidity out of the markets. And the article goes on to say, in the fallout from FTX's collapse, Bitcoin prices plunged to a 2-year low. The leading cryptocurrency is now down 75% from its all-time high.
Crazy.
Bitcoin promoters insist that with blood in the streets, now is a great buying opportunity.
Obviously.
Maybe it's going to be. From a speculative standpoint, if you've got powder dry and you want to venture into the crypto markets, be my guest, no problem. But detractors, as this article says, argue the reckoning in crypto markets is far from over. They say most digital tokens are intrinsically worthless, and that confidence, now rapidly eroding, is the only tenuous thing that gives Bitcoin market value. Nothing could be more true than that, John. It is nothing more than another attempt to have a different currency, again, like the fiat currencies and the paper currencies, which are backed by nothing more than your confidence in mine. And so ultimately, at the end of the day, when something isn't backed and when something is intangible and it's just a piece of paper worth nothing, I mean, those things that are not currently in use in a major way, like a fiat currency, they're going to lose confidence. And when they do, I mean, they're going to drop. I listened to Kevin O'Leary this week talk about the fact that he thinks Bitcoin will never rise to the heights that it did again because nobody has money to spend on it. And if you don't have liquidity to put into it and you don't have a world which is going to go irrational about their thought process of speculating in Bitcoin and it being a great example of something that would replace fiat currency or gold, then you're going to lose all of that momentum, and who knows where it ends up. I hope for the sake of the investor that puts money into these things, they don't get too crushed, but I can't help but think this is going to be terrible on a week in which, you know, Bitcoin lost 25% of its value, gold gained 3%. Right. So again, you ask me, is it a replacement for gold? No. It's certainly not dead, Bitcoin, and I don't want to spend too much time on it because I don't want to give other things too much time. Gold and silver is what this show is about, but remember, when you are buying cryptocurrencies at this infancy stage that they are in, you are buying a piece of speculative ownership in something that has not been tested, something that is not used frequently around the world, something that is not used by the mainstream, something that in most corners of the world is not even touched the average investor yet. And despite all of that, the amount of money that has gone into it, just goes to show you that places even like the Ontario Teachers Pension, who lost 95 million US dollars in FTX so far, as the stories are reporting. This is alleged, but again, as they're reporting, this is a scary thought. This is a scary thought because this could easily be a country that invested in this, could easily be a nation, a sovereign nation that put money into a cryptocurrency thinking it's the right thing to do. And there are many examples of that happening around the world. And I can't off the top of my head think of the one this year. I believe it was a country like Iceland or somewhere like that bought Bitcoin at like 36,000 and spent a fortune on it, thinking it was going to go 2, 3, 4 times as high. It's not, folks. Unfortunately, it's just not. It just doesn't have the legs to do it. So what does that mean? You know, it means that if you're an investor and you want to speculate and you want to hold something that's tangible, you have the option of owning physical gold and silver. What does that look like? It's simple. Take it home, buy it. Take a few ounces of gold home, maybe take a few 100 or 1,000 ounces of silver home with you. And when you're ready to sell, come back and the liquidity is there. It's been there. It'll always be there. It's world renowned for it. And it's an incredible situation where, you know, gold and silver are among the world's most liquid assets, far more liquid than stock. 2, you want to store it with us? No problem. Let's store it in your name, segregated from everybody else's holdings with serial numbers, and make it so that you can touch, hold, see your product. Go and audit it. Put it in your hands. Know that it's yours, that there's no exception of a person between you and your product. You want to put it into TFSAs, RSPs? Go ahead. We offer that and facilitate that, help people with that. We can do 401ks as well. So if you are a listener in the US and you want to use a 401k and you want to have physical gold and silver in that 401k, we can help you with that just the same as we can a Canadian investor putting TFSAs, RSPs together. Even if you want to bring them from another institution, which 90% of the people coming into Delta Harbour to open up a registered account, they're bringing the account they had somewhere else that just got kicked in the you-know-what. And this week was a perfect example of it. I got the most recent statement that the client had. On the most recent statement, the value of their fund was over $100,000 based on the number of units they had. The most up-to-date value of their holdings was 62,000.
Damn.
So they're approaching 50% lost, and that's sad because now they're going to take that and they're going to put it into gold. But we've remained very range bound in both gold and silver as of late, John, and they have just as of this last 7 to 10 days started to rally off those range bound areas. So it remains to be seen if we hold those areas and if gold takes off. I, for one, hope that we get more buying opportunities like this. And as far as silver is concerned, the most undervalued asset on the face of the earth right now. I highly recommend that you get into that for sure.
Where do you see those highs with gold? Which, I mean, at this point, with having crypto in the markets, it doesn't seem like it doesn't seem like that's a pipe dream. It seems like it could happen again. If you'd had to forecast now, if you had to crystal ball it, Darren, reaching close to those highs of gold and silver we had a few years ago, possible?
It is possible. Not only that, I think that gold in particular is only off its high of around 2030 by a few $100. I think we're $300 away from that now. So ultimately, I see that happening very quickly. I don't think that there'll be anyone who would be surprised by early next year to see us back in that $2,000 range, unless, of course, something significant changes and we're still given opportunity to buy in these zones, which is a great opportunity. And then again, of course, if gold is to rally back towards 2,000 and higher, 2,100, 2,200, I think silver does the same thing, John. And right now, it's less than half its all-time value. Less than half its. I mean, I have to say it a million times over, right? Remember, gold and silver don't have counterparty risk like paper investments do. Right. They're yours. You own it. Once you buy an ounce of gold, you own it. There is no counterparty risk, right? You don't have to worry about it being an asset that can be bled or broken in half like a stock can when it splits, or you don't have to worry about money being embezzled out of an exchange or threats like FTX had occur with liquidity issues. Gold and silver are nobody else's risk except for the direct investor who holds them, and that's the purest form of investment that you can have. So ultimately, yes, I think that by early next year, John, based on what we're seeing right now, inflation going nowhere and most likely leading to stagflation, because let's face it, look around you, folks. If the supply chain problems that occurred during COVID are still prevalent issues, if they are, then maybe we can make the case for this ridiculous move in consumer assets, consumer prices, consumer material items that have gone up through the roof. Maybe we could, but they're not. Yeah. They're not. Right. And don't come back at me with the whole saying about this week in Canada with the pain medication for the kids and things. It's already been proven. It's a labeling problem and a labeling issue, and hospitals are having no issue getting the pain meds. It's all a labeling issue. It's a bunch of BS. So if we are led to believe that inflation is going to be here for a while, then we can't do anything about interest rates. They have to stay high in order to quell that inflation down. But if everyone that's selling and had to raise their cost of goods, had to raise their cost of services and everything, if that remains, then we hit stagflation like we did in the 70s. And really, between everyone that's listening to this and you and I, John, what incentive does a retailer have to lower their prices? We're not getting cheaper prices in bullion if more comes online. We've had waves of moments where more bullion has come readily available, but our prices, we haven't been able to take them down. Retailers, it's a different situation. When they realize that their flow of goods is going to get back to a more consistent level, they have the ability to decrease their prices because competition will play a role in determining where you go as a consumer. But ultimately, that hasn't happened yet, John. And a lot of that bottleneck problem, a lot of that issue that we're having with supply, that's slowed down. It's still there, but it's nowhere near as bad as it was. People are catching up, and certainly some areas like chips and trying to get those chips out to the rest of the world, that's still an issue, but there are not as many problems as we once saw. The problem is, who's first? Who flinches first, right? Does the consumer say, screw you, I'm not buying your product anymore? Or does the retailer say, okay, I realize I can't gouge quite as high, right? Look at the
Yeah.
profits being made in all the sectors that you look across the board. Gas being one of the huge ones, right? We got to raise the prices. We got to raise the prices. Price of a barrel of oil went up. Got to keep raising them on consumers. Everything went crazy. Supply problems. The world's going
Mhm.
to end due to COVID. Gas prices go through the roof. Barrel of oil drops
Weird, eh?
way down.
Yep.
At 85 a barrel, it's ridiculous. I mean, 86 a barrel, whatever it is today. And I'll tell you, based on where we see everything, John, yeah, it's 88.32. It's up 2%, 2.5% today. And I'll tell you, if you look across the board at the long-term picture for all of this, gas prices aren't coming down.
Nope. Are
Not
you
coming down.
crazy? No.
Heating prices going up. Is there a lack of abundance all of a sudden? Is there a lack of heating oil all of a sudden? No, there's not. Don't let people tell you there is, because that's the way they are going to gouge your pocket. But if you don't fight back, if you don't call people to task, if you don't write into these companies, if you don't not buy their product, it's never going to come down. You got to compete. So as a consumer, you got to be smart right now. You got to keep some dry powder. You got to look towards assets that are going to hold and grow your wealth. And if you're not doing it for speculative reasons, do it for your family.
Yeah.
Do it because it's meaningful to put that kid through school in 15, 20 years or in 10 years or 5 years. Do it because for you as a family, you don't want to lose the value of your portfolio watching another collapse like 2008 happen. It's coming, folks. And I mean, I can't be any more clear about that. I'm not a doomsdayer. I'm not a guy who, buries food in his backyard or anything like that. I'm just an average guy with an average investment portfolio. I just love gold and silver because they haven't done me wrong. And so I love for people watching this to know the same and have the same effect on their wealth strategy. And you do that by owning gold and silver. It starts with Delta Harbour Assets.
Just take us through in the last couple minutes here, Darren, just some quick ways how you get it in your portfolio. What are the options again?
Well, really simple, John. When you're
Well,
dealing with Delta Harbour, you can use the e-store and just buy and shop online, or give us a quick call and we'll quote you a price. You like it, we'll send you an invoice, pay for it right away,
nice.
and we'll have the product sent out to you and shipped home. Anything over $2,000 is free shipping anywhere in Canada and most of the US. And so ultimately we can do that for our clients. Secondly, as we mentioned earlier, there is the option to put gold and silver into storage. So if you want it insured, you want to be able to buy and sell by phone call, and you want it in a non-bank depository,
Yes.
right?
Key.
A private institution that's insured and regulated by the regulators that we go into every single week. I go to that place and I'm looking at product, I'm auditing product, I'm dropping off, I'm taking. Never had an issue. I've been working with them since day one in 2009 when they opened. And it's been brilliant every step of the way. So if you want that kind of certainty about your ownership, knowing that it is segregated from everybody else's holdings, that you have your own account, that it's in your name, it's fully insured, 1-to-1, and that it's protected against all possible nefarious outcomes, then storage is the option for you.
Mm-hmm.
We can set you up with a storage account right here. The third option would be to put this into a TFSA or RSP or a RIF, a LIF. Take that dead ass pension that so many people listening to this have, just lingering around doing nothing, and get educated about it. And one of the smart things you can do is find out whether or not you can put an asset like gold and silver into it. More than likely you can. Everybody thinks that they're locked into these things, but locked in has two different meanings. You're not necessarily locked in. It just means you can't withdraw money right now without penalty. Doesn't mean you can't invest in something else. Right? A lot of people think that locked in means you can't touch it. So if it's invested in the company I was working for and now I don't work for them, but I still own my pension, odds are you can switch that pension from your company shares over to gold or silver. So many people have done it with Delta, and we do it all the time. And then, of course, if you want to go a step further, we have the bulk bullion option. Yeah. This is a simple option. And it means that if you're a buyer of gold and silver, instead of paying the bar premiums that are associated with the physical bars and taking it home or putting it into storage, you can have what's called a bulk bullion account where we keep the spreads the lowest possible that we can think of. It's the most cost-effective way to buy into physical gold and silver. And it just simply means that for the time being, until maybe premiums come down or are lower, you don't have to declare what specific bar type you want any more than you have to worry about it. It's put into a vault the same one we use for our other accounts. It's audited, it's kept an eye on, it's fully insured, and you can come and go as you want. And the beauty of the bulk bullion account is that, let's say you take that same 100,000 and you put it into silver. Well, you can buy the bulk bullion in silver, physical silver. It's there in your account. It'll show you where it is, tell you where it's stored, all of the uniqueness that you get with that account. But in addition to that, you can take that 100,000 and use it to finance a purchase of up to almost 3 times as much. So there is a lot of good that comes out of this account when the market's rallying or expected to rally, and you can prepare for this. And again, not for everyone, but for those that take a look at it and assume the risk and are fine with it, hey, it's an option that's on the table. But that bulk bullion account keeps the cost down, especially if you're a buyer who says, I don't care about having these bars and coins in my house. I don't want that baloney malarkey because it's just more hassle for me. It's too heavy. I don't want to have to bring it back or box it up and ship it or any of those things. Maybe I just want exposure to physical gold and silver because I know it's the right thing to do. The bulk bullion account is for you. So 4 separate ways, John, really simple, all outlined on our website. And the number or the website is the greatest spot to start. And before we go again, John, as we do every week, thank you for everybody that tuned in as usual. We're now about to see, and some of our Western friends have already begun to see the snow fall, the colder temperatures setting in. Please, as we do every week, take care of your neighbor. Go to the local food bank, put a few extra bags of groceries together and send it over. Go to your checkout, your Zehrs or Zobies, your Loblaws, wherever you shop, extra bag for your local food bank and send it over there. Give them some cash or donate, because before you know it, your neighbor could be in real serious trouble in the situation that we find ourselves in right now, and nobody else will be very, very knowledgeable about knowing it, but you're still helping them out. And believe me, right now, we need it more than ever, John. So get out there and donate to your local food bank.
All right, guys, that is a wrap. Moving forward, of course, deltaharbor.com, Delta Harbor with you. You can see that right above Darren's head, the spelling of this particular firm. Delta Harbor is a place to go. And that phone call, as mentioned, just make the phone call. Start with a conversation, dip your toe in, and get this part of your portfolio up and running for sure. 1-877-323-GOLD is how you do that. And we'll catch you on the next Hard Money podcast.